The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. And I'm going to start the show today with several people have asked me to discuss two patterns that are becoming very popular on the internet. One is the Hindenburg pattern, and the other one is the Jaws of Death pattern. I thought I would put the Dow Jones Transportation up on the daily basis because it shows the Jaws of Death pattern, which is really it's exactly what H.M. Gartley called a T6 symmetrical pattern triangle. T6 was the number 6 symmetrical pattern. It's one of the strongest signals of all. It's got the highest probability of working. And as you can see here in the transportations, we have broken badly in the last 2 days. We had an outside day to the downside yesterday, and then we gapped down today, which is a very ominous sign. We're almost at the lows of the last 2 weeks in the transportations. That comes in just under 8,500 at around 84.70. So this is a very, very ominous start to something like this. But I don't know who the gentleman was that called it the Jaws of Death. You know, there's a lot of patterns out there. You know, I call mine Gartleys and butterflies and three drives, and other people call theirs three little Indians or whatever they want to call them. But they're still patterns. They're nothing more than triangles with the ABCD pattern within itself. And the symmetrical triangle here is a 1, 2, 3, 4, 5 expanding triangle, which we hit on Friday, and since that time we've reversed quite a bit. You know, we have a Bradley date yesterday, and we also had the autumn equinox, you know, which is also very important. And then we also have the Hebrew cycle, which is the Sel on Rosh Hashanah, Bayan Yom Kippur. And Rosh Hashanah starts on the 24th, which is the full moon, and that's been that Hebrew cycle is based on a lunar cycle, of course, and that was brought to my attention by Ira Epstein from Chicago, and his father traded that for quite some time, and it has a pretty good, way of looking at it, but it's again, it can be an inversion on some of these things. So this is what we're really looking for. Anyway, we are going to, I think we have a caller already. Is that true? We have someone calling about the euro? Lou, are you there?
Yes, I'm here, Larry.
Good. That was my next thing to look at. I'm glad you brought it up. You must be a mind reader today. Hold on, and I'll put it up here. Yeah, hold on just a second, and I'll get it into the room here, because we are at the proverbial moment of truth here in the euro as we speak here. We're sitting at the 61% retracement of the low we made in July of 2012. So it's really important that this euro holds 128.
Right.
Did you have a question?
Yeah, the question was, I was thinking of shorting it here.
You know, actually, I would. You know what you would rather to be safer? It would be safer to sell it under 128. I would sell it like 127.80, something like that. I would like to see it break here, because it could actually hold this 128 level without any trouble at all. See, because this is a weekly chart, and we've been down like 13 or 14 weeks, which makes it very, very oversold.
Mm-hmm.
But if we get below the 127.80, I would say, well, this is failing, and we're getting ready to, go a little bit lower. So I certainly can't sell it here, because you're too close to an exact 618 in a very oversold market. But any more weakness, then you can sell it, because, you know, these things can drop and drop and drop, much like we had, you know, in 2009 and also in 2010. So these can happen that way. But right here, the risk reward here, well, you know, if you want to, you could sell it and risk 50 pips. There's nothing wrong with that.
Right. That's
you know.
true. Right. So against the dollar looks like it's going to go strong.
The dollar is at the the reverse of this, because the dollar is rallying strongly. We're up at the 85 level in the dollar index. It doesn't take much to pop it through. If we get above 86 in the dollar index, Lou, the dollar index could see 92 without any trouble at all, and this would put the euro probably down around the 120, 115 area. And believe me, the euro is very, very bearish. It's been bearish for 4 years. Every time we've had a really strong rally of 10 or 15 or 20 points in the euro, it's been a selling opportunity. And this last one that came in at 140 was, exactly the same thing. And this is why we're at this really critical level here at 128.
Right. Okay. So I think I might do that and do 50 pip stop.
Yeah, just use a 50 pip. That would be above the high of today, and you certainly wouldn't want it if it went above the high of yesterday, which is up around the 130 level. So you've got an acceptable stop there.
Okay, great. Thank you, Larry.
Yeah, you bet. You're certainly trading with the trend on this one, my friend. Okay, the next one that I wanted to show you, which I think I was talking about the jaws of death pattern that we talked about with the transport. The next one that we wanted to mention that someone asked about was called the Hindenburg. The Hindenburg is a pattern that's based on the number of new highs and new lows ratio, and also the McClellan oscillator, and I believe one of the moving averages. This pattern was actually the brainchild of a man named Kennedy Gamage. He was in Orange County. I'm going to have to take you back through old history today, folks, because back in the late 60s, early 70s, there was a TV station in Los Angeles called Financial News Network, FNN. It was run by Merrill Lynch. It put the money up behind it. It started a half hour before the market opened, and it went till about an hour and a half after the market closed. The flagship program on that show was a show called Charting the Market by Gene Morgan, who was a very large broker for Bateman Eichler, and he was one of the first people ever to bring out an S&P 500 trading fund back in 1986. But his good friend was Kennedy Gamage, and Kennedy Gamage was the fellow that developed this Hindenburg signal, which we are in that signal right now because the new high to new low ratio has been rolling over, even though the stock market has been, rather strong. This, what's interesting, I remember both of these fellows, Gene Morgan and Kennedy Gamage, have since passed away quite a long time ago. But the FNN was actually run by a man named Glenn Taylor. He actually worked for Merrill Lynch for a while, and then Merrill Lynch was giving up on the show, so he took over Financial News Network, and he was living with a girl named Sue Herrera. And you'll recognize her because she is the anchor for CNBC. Well, they had a falling out, and Sue moved to New York, and she made a proposal to NBC to bring out a all-day, all-night, stock market show. This was in we're talking about 88 or 89 right now. It was right around 90, I think, something around that ballpark. And Sue and Glenn were commingled for a while, and then Sue started to date one of my best friends, and she moved to New York, and she took it over, and she took with her comrade in arms, two of them. There was Ron Insana, who was just out of USC as a graduate student, or a student in journalism, and then also my friend Bill Griffith, who is a real gentleman. All those people are just super. They've never changed a bit, and they're just really, really wonderful people. So it was really fun to go through the history of this. But the Hindenburg is another one that has also triggered, something really something really happening. But folks, there's something more sinister out there than that. And this is something, I don't know if you ever listen to me or not, but pay attention the next few minutes, because this is the important one in my humble opinion. Okay, the chart that I posted in here is the Dow Jones chart going back to last April. And on top of that is the blue line, which is the New York Stock Exchange Index, which is the broadest of all the indices that we have. Okay? Now, if you look at this, you'll notice during the July period we had a divergence where the stocks for the New York for the Dow Jones made new highs, but the stocks for the New York Stock Exchange Index did not make new highs. That was a divergence. We just had the same divergence occur on Friday. We had the Dow Jones making new highs, but the New York Stock Exchange Index could only make a 786 retracement of that move. So this is a major divergence. And what you need for this signal to work is to have a very quick, hard down move, a la what we're having today. So this is what we're seeing. What I think is one of the most major sell signals that we've had in a very, very long time, especially when it's coming, right near the Bradley date, which was yesterday, and then also the, the autumn equinox. But this market actually topped, on July the 3rd, the first time, which was in 4 days of the low of 1929, and then also on September the 3rd, it topped. And that was the anniversary date of 1929. And folks, I've never talked about the C word that ends in H, has an R and an AS in the middle, but we are getting ready for one. So buckle your seatbelts, folks. There's too much complacency out there. It's exactly like it was in 87. I was only 11 years old in 1929, so I didn't get to trade, but I imagine it was pretty much the same thing that we're seeing at this particular time. But this is a very, very, very negative divergence sign. Just to I'll throw the gauntlet out to you guys. Anybody that can show me where this particular pattern failed, I would like to see it, because it is really a big one. I mean, it is. I'll give you a prize if you email me and send it. Oh, by the way, I have to say something a little off the beaten path here, because the biggest bull market we've had over the past decade has not been stocks or bonds or anything like that. It's been the cars, the automobile markets, the exotic cars, collector cars. And I have a good friend in Pebble Beach, a good trading buddy there, and there's a place up there that has some of the most beautiful cars in the world, hands down. They're very expensive, but on Saturday they featured a 1955 Gullwing Mercedes. I think it had 5,400 miles on it, completely restored, and I guessed it was going to run about $1.2 million. And the price on it was 2.3. But there was a car there that would, you talk about a car to die for, was a 1953 Eldorado convertible Cadillac, bumper to bumper, brand new, just absolutely fantastic. And I told Sarah, I said, this car is a steal in $100,000. And when I got the bid back, take a guess, boys and girls, what that car is going for. It's already sold, but it went for $375,000. Brand new, it was $2,750. $2,750. So that is really an incredible car. Anyway, we've got to take a little break here. I'll get back to the markets. We've got a lot to cover. Dow's under some pressure, and gold is still under a little pressure too.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, the next charts that I posted into Tiger TV is I posted the chart for the New York Stock Exchange Index on an hourly basis, and you can see how it made the 786 retracement Friday to the exact tick. And the next one that I posted in is very, very important because it's a chart going back on the Dow more than a year. And as you can see, we've completed a big ABCD pattern here. And this has really big implications, folks, because the real market, which is the New York Stock Exchange Index, which is thousands of stocks that are the best stocks, the highly leveraged or the highly capitalized and highly liquid stocks, thousands of them, I think there are 2,300 in that group, are really not doing, very well at all. And of course, the small caps are doing, very, very poorly, which we'll look at a little bit. But this is very important here from my perspective as a Fibonacci person that likes to, look at ratios and proportions within these patterns. But if you look at this Dow Jones pattern, if you'll pay attention to the ABCD swing that measured up to 17,209, and the high was 17,351 yesterday, Friday. But what's interesting here is the BC swings of both of those legs. In other words, the first BC swing, if you multiply that times 1.618, that takes you to 17,300. And if you do the BC swing of 1.27 over the last 2 weeks, that takes you exactly to 17,350. So something really big happened on Friday. I know the divergence was happening in this. We've been talking about the fact that it's been very, very weak in the NYSE index for quite some time. But, folks, this is major stuff what's happening here. This is mother, God, and country. If the market goes up and makes new highs from here, you just record this show because this will be one of my last ones. This is big. This is really big. I just can't tell you how big this is until you'll start to see it, eventually. But it's really, really, really big. And commodity prices, folks, are really falling badly. We've got wheat, corn, and beans. They're really getting hit more and more and more. Corn is under $3.30 a bushel. Wheat is under $4.80 a bushel. Beans are under $10, quite a bit under $10 a bushel. Cotton's collapsing. Everything. Steel, copper, gold, silver. Gold and silver we'll talk about after the break because we had some real interesting numbers hit. On Sunday night, so we have to watch it, very, very closely. But it's going to be interesting to see if these commodities are going to turn around because you don't have a bull market, a long-term bull market, unless there's demand for the commodities, and there's not any demand for these commodities, folks. What are they going to make well, I guess we've got the internet. We could just make everything out of thin air. I had the unfortunate experience to be hacked very badly yesterday by two groups. One was called Safe Home. Safe Home Page was one. Is a terrible virus. It just basically I have to take the computer in to have it washed and cleaned, I guess. And then the other one was one called Trovoli, Trovli, and that comes out of Russia, and that is just as bad as Safe Home Page. And what they do is they disguise it as Internet Explorer, saying that you need an upgrade of Internet Explorer. Well, this old dude, I'm an old cowboy. I don't understand that. I just looked at that, and it looked exactly like Internet Explorer, which I thought it was. The IP address looked right. So I downloaded it, and guess what? I got a giant surprise. Fortunately, I got a couple extra computers at work, and that's the good part of it, so we'll wait and see. All right, we're talking about the stock market here. When we come back from the break, we want to go into the gold and silver. We want to cover the currencies. We want to cover the bond market. But we've got something really, really big happening in stocks, folks, with that divergence on the New York Stock Exchange Index. It is really, really important because we don't see that signal very often. I don't know, we ought to give it a name of some kind, but it is really really a big pattern that is going on there with that divergence, because the Dow has basically, and so has the Nasdaq, has basically masked this, and the Nasdaq, all it did Friday was make a slightly higher high than 2.5 weeks ago by just a few points, and then just gave it all back. I mean, it's just it looks horrible on the chart with that double top. In fact, I think it would be a good idea if I were to post that for you folks so you could see it, and we would be able to look at it without talking too much about it, and we'll be able to see it. But you'll see that we had that same jaws of death pattern on the Nasdaq. Excuse me, on the Nasdaq, and now we had a double top. So we're getting close. Okay, we got the Dow down under some pressure. Gold's coming back to be up on the day. We'll be back after this message.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted into Tiger TV the chart for the biotech index, the IBB, and then I've also posted the chart for the Russell 2000, the IWM. These are the small caps, and as you can see, that small cap index has been going down for quite some time, and we just completed a 61% retracement last week from a lower high, which makes it even more bearish because we've had lower highs here for several months now in the IWM, and we are lower. It's been leading us down, and of course the NASDAQ is under a great deal of pressure today also. So these are things that we're watching as we go through. Now we need to talk about gold and silver because they've hit some very important levels. Whether they're going to hold or not remains to be seen because of the overall weakness that we're seeing in all of the commodities. But we've had gold here making a big ABCD pattern down here at the 1212 level. Last night's low was 1208.5, I believe, and we're trading around the 1220 level now, which isn't up. It's up a little bit, but really not very much. But gold must hold this level because if it fails, we'll be looking at something below 1170 in the gold, and it is bearish. But the question is how much of a rally will we get from this point? Now, whether the market can launch a big bullish campaign from this level or not, no one knows. The odds say No, the old Chinese proverb, I think it's Chinese, it says, chance favors the prepared mind. Well, you have to prepare for something really bullish. But if this is going to be really bullish in gold and silver, it's going to come out of here like a rocket. I mean, gold's going to take off $40, $50, $60 to the upside, probably in one day. And silver could move $1 an ounce in one day. So it's got to do that. Otherwise, it's still very bearish. All it's doing now is hitting some very, very long-term targets. That's really the only thing that it is really doing. If we take a look at silver, last week we were talking, when it was trading above 1,800, we were looking at a price of $17.46 per ounce, which was the 786 retracement from the 2008 low. We have a 3 drive to a bottom pattern and a butterfly patterns forming here at this level. So it's a major, major support in silver without any qualms in my book. There is a potential, though, if you'll notice this long-term weekly chart, as we have a potential ABCD pattern that could take us down to $15 an ounce. And, folks, if it can drop $1 an ounce in one day, like it did Friday almost, yeah, it was just about $1 an ounce. It can drop, 2 ounces in 3 or 4 weeks or even less. So you have to be very, very careful here and just watch these price levels because, you're safe buying them there, but you have to be able to put in a stop. The low on silver overnight came in at $17.32 per ounce. So it was 13 cents, which was $600 under the price that we were looking for. But then it's had a very good rally of well over 45 cents. So the risk reward there sure made it a doable trade if you were following it from that point of view. Now, if we take a look at the gold and silver index together, going back over the past year, you'll notice that the gold silver index is still holding above the May lows, but not by very much. And it still has some higher bottoms here going back to last December. So whether that's going to hold or not, we'll have to wait and see. We've got one of our favorite people calling in. Let me get ready for my stock of Priceline. Charlie, are you there?
Yes, how you doing, Larry?
Well, it gives me a chance to check the price of Priceline because I only check it when you call in, which is every couple weeks, which we always like to hear from you. So give me a second here. With the market under pressure, let's see what we've got here. Let's see if we're heading down. Give me a second to. We had a big gap down today. Oh, yeah, we're heading lower now, my friend. You've got. This is the one you were adding to it just the other day, weren't you?
Yeah, I added the day I spoke to you. I was going to wait to the 200, but when you said no, now I added at 11. It was at where was it? It was at the. I'm looking at my chart.
Mm-hmm.
It was 1180.
Okay.
And then, and that's right when I said you may have to come off. And it went up a little bit more. I added one more and hoping that it would get to the 200. Otherwise, I was going to wait for the 200. But when you said go, I went and it worked out. It never got to the 200.
It's good that you call in like that because I like to be right about once every 6 or 8 months. So whenever you call in, always remind me of that, okay?
Let me.
Anyway, this looks like we're going to go below 1,000 on this run. This has got a big shot to go to the downside.
I looked at it. Does it look like it'll stop a little bit above the 1,000 first?
Yes, you have a potential double bottom there that'll bring in probably some buying, but going through that is going to tell you that you're looking at something, far more bearish than most people will want to see. And the market is in such a bearish mode now with this divergence that we've had is that this is going to be really nasty. This is just the start. I mean, this is not. This is nasty what we're looking at right now.
It reminds me very much, of 2000, where we had the same problem. And I see this. I was thinking that when I did the calculations, it looks to me like about 1,050 is where it should stop. And I'm just kind of trying to get it.
I'm looking at around 1,070 is what the number that I'm looking at, Charlie.
Okay, great. So somewhere there, maybe take some off and then let it bounce up again and then short again.
Trade the swings. You do well with trading the swings, but now with the gap down that you have here after you've had a 5-day rally and then a big gap down like this, boy, if that doesn't signal lower prices, I don't know what does. because this is really an ominous chart now with Priceline for sure.
Mm-hmm. And you did mention 4 days and she goes down. It took it a little bit longer, one more day, but it is heading down, and it's heading down, looks like pretty quick. And it's a nice drop to 1,050.
Well, let's see what happens, okay? Be sure you call in if it gets to 1,050.
Yeah, I will call you.
Okay, Charlie.
Thanks very much for the help, Larry.
All right, thank you. Well, it's always nice to be right once in a while. Okay, let's go back and take a look at that silver chart again, folks. As you can see here, we have made that long-term price objective on the weekly chart on silver. And I wanted to get to show you what happened on Friday. We alerted everybody to the people that I trade with is the fact that we had this big wide-ranging bar coming down on Friday right at the 1.27, but our price objective on the weekly was at 17.46, and I was really surprised last night. The fact that we had gold down just a little bit. Gold was down $8 or $9 overnight Sunday night, and silver was down 50 cents, which is a lot. That's $2,500. And silver was down, 50 cents down to the target area, and has since turned from there. I don't know if that's going to be the bottom or not, but the chances are that it is. And if it is, we could get a very substantial rally from here in both gold and silver, because it hit those patterns. They're complete. They did what they were supposed to do. The numbers we've been looking at come in within just a few $100s of what we were looking for 3 or 4 weeks ago. And that's what you want to see happen, is when you get to these numbers, is to get in and then not risk very much, and then start following the swings as they unfold during the day. So far, we've had a better than 50-cent move to the upside in silver, which means it gained everything that it lost overnight back. And gold is, in fact, up on the day now, which is also potential for a positive sign. So that's then. Now I wanted to mention one other one that is really close to going down quite a bit, and that is we want to take a look here and see the price of crude oil on the daily basis, because this crude oil on a daily basis is making this pennant formation, as you can see, where we have lower tops and higher bottoms, and the real critical level here is at $90 a barrel, and this will affect all of us, folks, because this would be like a tax rebate, because if this oil breaks below 90, the next level would be right around $70 a barrel would be the next support, which would be the 61% retracement of the low from 2009. So if we break below this $90 a barrel level, you want to look at short side, on the oil itself. And why it's going to do that, I don't know, but it's at a really critical level there where we're trading right now. We're trading a little above $90 a barrel at 91 and change, but the slightest move below $90 a barrel, if you see it at 89.90 or something like that, to me that's going to be a very, very big event, and it should start to accelerate to the downside. We've been coming down now for well over 3 months, and with virtually no rallies in between. So these markets, like all commodity markets, are under a great deal of pressure that doesn't seem to want to let up a bit. I also posted the chart of the VIX index, but frankly, Basil Chapman does a much better job of covering the VIX index than anybody in the whole business. So if you'll just listen to what Basil has to say, that gapped up, which in itself is a pretty bullish sign, and if it closes in the top end of the range, anywhere above where it's trading right now, that would be a very, very positive sign, and means that we're probably going to go up and test that 22 to 25 level. But I believe we're going to eventually get to 50 or 60 in the VIX index sometimes before now and the end of the year. So whether that'll be the case or not, we'll be able to see, what's going to happen. I'm going to switch over now, and we're going to take a look at the Treasury bond market. And I thought I would let you know that I'm going to do the bonds first, and then I'm going to do notes and bonds together. But as you can see, the Treasury bonds made a 61% retracement of the low from last July, and we've had a pretty good rally, and then we will look for a move up about another 3 points from where they are right now, up around 139 in the December bonds. I would be looking for a potential short sale because this market is going eventually going to go lower, i.e. higher interest rates. No matter what the Federal Reserve decides to do, it really doesn't make a whole lot of difference. The next chart that I want to show you is it does two things at once, and I want to show you why. Okay, I posted the chart of the Treasury notes that we were looking at in early August. And if you'll notice there, the blue line, which is the Treasury bonds, went up and made new highs, and we took out the highs from October of last year by quite a bit. The Treasury notes certainly couldn't do that. But the important thing is if you'll look at that green line there on the Treasury notes where the candlesticks are, you notice that you've had lower tops there. And then if you look at the blue line above it, you'll see the divergence. In other words, bonds were going up and notes were going down. Short-term paper was going up in interest rates. Folks, this is the same pattern that we've got going in the stock market, this divergence that we have. The same thing, only it's with the New York Stock Exchange Index, basically all the stocks, versus the Dow Jones Industrial or the S&P or the NASDAQ. Either one doesn't make any difference. They're all showing the same divergence. So the market is much more weak than people, I better be quiet. The market looks very, very weak in my opinion. That's all I can say. It's much weaker than it looked in October of 2007, right before we headed down. And the reason for that is all the markets were going up, making new highs in 2007 in October. This is not the case here in the fall of 2014. Here we have a divergence where the biggest overall stock market index, the NYSE, is making lower tops, whereas we're making higher tops in the 30 stocks of the Dow Jones, or the 500 stocks in the S&P, or the 100 stocks in the NASDAQ. You're talking about 630 stocks, opposed to 2,400 or more. And then if you throw in the Russell 2000, that's even weaker. So the market is much weaker than, they're telling you on CNBC, but, they like to flash new highs and new lows, and that's important that they do that. That's their job. But it looks to me like we could get a rally in the bonds another couple of points higher here, especially if we get some type of a flight to quality. Then that would be a potential, for something like that to occur. So that's what we're watching here in the Treasury bonds. In the Treasury notes, they're still headed down. They're just in the midst of a little bit of a rally. We covered the euro. And I wanted to go over the euro one more time because of where we are on this long-term weekly chart. Over the past 6 years, this has been in a very strong downtrend. All the highs have been lower, and especially here when we got up to that 140 level. And now we are setting at the proverbial moment of truth down here at 128 in the euro. Frankly, what I think is going to happen is we're going to get a bounce from here, from the 128 level. I could be wrong. And the dollar is very, very overbought, and that could also, because this is 53% of the dollar, could also have an effect. Okay, we'll be back after this message, and we got the Dow rallying just a bit as we come into a break.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and I posted into Tiger TV the Bradley stock market model, and we have a key Bradley date coming into date that's directly related to the equinox. So it's very interesting. And then we also have the Hebrew cycle, which comes in on the 24th, where the adage is to sell on Rosh Hashanah and buy on Yom Kippur. You'll see this mentioned on CNBC and on Bloomberg. If you listen to them, they always bring this up. And I've done a lot of statistics on that, and the cycle does work. But sometimes, you know, the full moon that we have on the 24th could be a low, and other times it's going to be a high. So, you know, you have to be prepared for that. But the overall rule is that you sell on Rosh Hashanah, you buy 7 days later on Yom Kippur, and it is a lunar cycle. So it is going to be interesting to see what happens. The important chart, folks, today is I'm going to post it again because I believe that it is the most important chart that you possibly look at for the rest of this decade, most probably, and that is this chart of the New York Stock Exchange Index, you know, showing the divergence of what's happened with the New York Stock Exchange Index being unable to make new highs, when the Dow Jones was able to make new highs. The S&P was able to make new highs, but it did not make a 1.27. It was a little short of that. And of course, the NASDAQ was able to take out the old high by just a few points, and it also could not make a 1.27. So the Dow was really masking a great deal of weakness in the market. But this divergence, if you want to do yourself a favor, defy human nature, do the work yourself. Go back and look to see how many times a divergence like this has happened with the NYSE and the Dow Jones, because it's very, very important to take a look at this. It's one of those things that is really important. I have one other thing I'd like to mention here. A little memory log came in here, but back in the early 70s, when I knew Gene Morgan and Kennedy Gamage, it was always fun to see these guys because they had wardrobes like you couldn't believe. I mean, they had some of the most beautiful clothes. They paid $2,000 and $3,000 for suits. And at that time, and I think a Hickey Freeman suit, which was a top-of-the-line, off-the-rack suit, was around $500. So they always dressed with custom-made shirts and ties and stuff. So it was really, it was always a pleasure being around them because they were certainly a class act. And much like, what Art Cashin is on the New York Stock Exchange these days, he's also a really class act. But going back to this chart, this New York Stock Exchange Index chart showing this divergence is the key chart, because you just don't see this very often. When we saw this in July, we had a better than 6% correction in the Dow, which has been our first correction in a long time of our April low, which had stopped right at the 61% of the April low. So if it did this again, that would tell us that the Dow is going to go to at least 16,600. And since we've given back several hundred points in the first day, my guess is it could come down, even more. The other thing that's very important is where we are with the euro here at 128, because if we go below 128 in the euro, this is going to mean more dollar strength. And with the dollar getting stronger, it's going to mean most probably that commodity prices are going to weaken. So that's really, what's really happening. So just keep in mind that's what we're looking at here. Anyway, I hope you folks realize the double top that we made in that New York Stock Exchange Index is a really big event. I mean, it doesn't get much play because nobody follows that index. Okay, folks, that's it. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.